All right, ladies and gentlemen, today we've got a very, very special guest. I'm very privileged to have Alex Phillips here in the office on our live property and finance podcast. Alex is a partner of PPD and founder, obviously, co-founder, and most importantly, number one real estate agent in Australia now 7 years in a row. Alex, thank you so much for coming on.
Thanks, sir. Thanks for having me.
I thought Alex would be a good person to get in here because he could, he's on the front line of the property market. He's on the front line dealing with buyers, vendors, and also tenants and landlords. I think there's a lot of what we call media myths out there at the moment. A lot of hysteria around the property market crashing and interest rates rising. And whilst Alex is in the one market in particular, being the eastern suburbs, he is privy to different brackets of that market and seeing different things. So, Alex, great to have you on board.
Thanks, Theo. I think the good thing is with us, like this year we've sold properties from a studio at $440,000, which is our first property of the year, up to one we're selling today for just over 13, and we've done everything in between. So we get a really good broad spectrum of apartments, low end, high end, different demographics, different buyers, and we're selling like 15 different suburbs. So we get a good spread, and we are, I think, a little bit ahead of where the data is. When you look at
what do you mean you are a little bit ahead of where the data is? What do you mean by that?
I think data can be lagged.
Yeah, definitely. But
like it's probably lagged a month or two. And it's probably not shown immediately. Where us standing in open home, and if we've got 25 groups at a $2.5 million house on the first open, where I go back to November 22, we would have had 12.
So this year is very different to last year, right?
Yeah, I think what's happened is there's an equilibrium with buyers and sellers at the moment. Sellers are at the right level. Buyers are back into the marketplace, seeing better value. The eastern suburbs market probably has come off the most and the quickest in Australia, I would say, or close to the most. But
there's a certain bracket that's come off the most, right?
Yeah, and that's where the sweet spot is at the most. That sort of 3 to 5 bracket. That's probably where it came off the most. Units as well, like some units that were sold in 2016, end of last year, were still selling for the same price as what they were sort of 4 or 5 years on.
That's because units didn't see that same run in COVID that houses did,
It's
right?
also the credit crunch people forgot about.
Yeah, good point.
With the banks where the upper end kept going, lower end didn't. So I think the data that we're seeing is numbers of inquiries through web portals have tripled. Open homes have doubled. Buyer activity on the point of a sale is probably double, but still a bit flaky.
And tell me why that is. Like, you're having actual conversations with these individuals, right? So is it because a lot of people last year just went, I'm going to wait till next year, and now they're thinking it's a good time to jump in? Like, what are you...
Yeah, it's a whole mix of reasons. I think, they're still investigating a little bit. So you go to put them under the pump to make a decision, and they fade away. They might not have their finance in place or not mentally ready. You get a little bit of that also at the beginning of the year, because you get a pool of green buyers that haven't been through a scenario of missing out yet. I always say you've got to be burnt once or twice to be a good buyer, I think.
To move quicker.
Yeah, to move quicker. And so I think now they're in, that'll happen. Yeah, you look at the stock levels. The stock levels are sort of about normal, I would say, at the moment. Everyone thinks they're lowish, but they're sort of about normal for the eastern suburbs. So I think...
as in normal for when? So January and February is normal for the previous Jans and Febs?
Yeah, I would say it's about the same, or even January is probably higher.
Yeah, because people like yourself, you listed it a lot sooner this year, right?
Yeah, we were in the office from the 2nd of January. Yeah, my team did 11 sales. We normally do 2 or 3.
Wow.
So, so it started a lot early, but, we sort of did also finish in early December. But I think, with the interest rates as well, because I've got loans that have gone from 2 to 5.5%. So, like, I feel it myself. We've got clients that are saying the same thing. But then there's a lot of buffer built up in the system too.
But on that point, so people that are feeling like their repayments have doubled or if not close to tripled and their interest has gone from 2 to 5, what's that making them do? Are you saying that's a vendor that's thinking, I was going to downsize or I was going to upsize and now I'm going to hold off on those two things or more likely downsize? What's the repayment change making?
It's probably bringing out more upsizes because the market's come off, and upsizing in a down market's the best thing to do. On a going down, it isn't. So those vendors that want to sell for a premium price probably aren't selling now because they know they're not. But if you're selling a property, if you had a semi that was worth 2, now it's 1.8, and you're buying a house that was 4 that's 3.6, you're ahead 200. So I think that the savvy buyer out there looks at that.
But that's the one that's not freaking out about repayments, right? There's the other person complaining about their repayments who's probably thinking I should, offload my debt and maybe downsize, right?
Correct.
And is that you're saying a bit of that?
But definitely.
But is that also some of these vendors aren't really telling you their full position on their repayments and not acting like they're hurting it sometimes?
They're never going to really tell us. You can unearth it pretty easily. But I still don't think we're at that point yet for a lot of people. Maybe they're trying to protect themselves before they get to that point.
Because I think on that point, that there's a lot of fixed rate. We've talked about this a lot in these podcasts, but just to sort of highlight it once again, there's a $370 billion worth of fixed rate loans coming to maturity in 2 waves this year, end of the financial year, the June quarter.
Why is it in 2 waves?
Don't know. I think that's just
I thought it would be just spread out as people come off.
I think it's mainly when a wave of people just transacted or refinanced back in 2020 or 2021. I think I'm going to guess that it was the April wave in 2021 and now the spring wave in 2021. So it correlates to June is one wave that's coming to maturity and the second wave is December. So I think that's the spring market and that April market.
What's the longest term someone can have a fixed rate for?
The 1.99% specials that we saw back then were 4 years, the longest.
So if I sold a property now on 1.99%, can you transfer that loan at 1.99 to the next property?
You can, but it's not easy. So they could do it. Good question. This is a great question. They could do it, providing they don't need to borrow more money. So if they're moving from one property to another property and they can maintain the same debt, they can maintain that same rate.
So if let's just say they sell a property for 2, buy for 3, if they put in $1 million equity, they're sweet.
Yeah.
But if not, what about the differential? Is that is part of the loan at 1.9 and then the rest at 5?
But the moment they need to borrow more money, it
wipes it.
Wipes it.
Okay, so you start again.
You start again and you have to break the loan. The other thing that's really hard to do, which you can appreciate, is to do that, you have to make a simultaneous settlement. So they've got to buy something with an extended settlement and then hopefully sell their property in that settlement period and try and then bring settlement forward with the purchase,
Yeah.
And people like that. So that's actually a good segue into talking about people manoeuvring in this current environment and current climate. That's something that last year we saw some disasters. Some of the clients that we were helping you on, we saw that they they bought properties assuming they could sell in the settlement period. Then the federal election sort of wiped out confidence overnight, and interest rates started going up overnight, and no one saw it coming. And all of a sudden, they went from thinking they could get $4 or $5 million on properties to looking at 20% less. And now I think there's a change in habit. Don't you feel that people are selling before they buy? They won't take the risk of buying before they sold?
Yeah, but they still want the best of everything. They still think they can do it, but I think that they generally get to a point where it's sort of still 50-50, but generally when they get to that point where they need to make a decision, they probably miss out on the house they're looking, then decide to sell. So they do it. They freak out, have a panic attack, and then realise they got to sell first. So
I can relate to those panic attacks.
You have one daily. Don't you?
Yeah. Every now and then.
But we're when we go in a list of vendors, or like they're buying first. I don't think many agents do this. We say this is probably a real price, but take off 500 grand or take off 10%, work off that if you're going to buy first.
That was basically my next question.
So we always have, like we say, God, you don't want to get caught out. But if you're, like we're selling, trying to sell a house in, 2 houses in Bronte at the moment, they're downsizing about 5 mil. We said, so even if you downsize 4 mil, would you still do it? Oh, we're not sure, probably. We'll work off that. Anything above's a bonus. So I think that's part of what, you do well as Shore Financial, we do well, is giving them like sound advice on the risk and a fallback position.
Prepare for the worst case scenario.
A lot of, we've got one at the moment where they bought a house for 8 mil. We're trying to sell their place. We thought we'd get 6.5. They're now at 6. And they're talking about losing the 10% deposit. So we're talking through all the different scenarios and, the different probabilities and what that might mean for them. But they went in and bought that property before we were able to, to give them, a real price on it. So
an accurate appraisal of their current property.
And I bet now they're probably thinking they wouldn't have bought first.
And do you feel like that's the hardest thing that you're managing right now is expectations on what you can sell their properties for?
Yeah, I think, we, like obviously we list a lot of property, we miss a lot too, but a lot that we miss we get second time round because expectations we've given...
we're more honest.
But by then they've missed that expectation because the market shifted again. We sold 5 of the 11 properties in January were from properties we took over from other agents. That actually 4 of them went for more than what they had on it.
And that makes your job harder though. If you're coming in the second time round, they might have already cooked the market a little bit by having a false start with their launch.
That
right?
happens a lot, but. If you manage to change at least 5 aspects of the sale, it doesn't look like that. So we always come in with a full different suite of ideas to change.
But like, if you're going to give advice to potential vendors of ours and people listening to this podcast, don't list with the agent that's obviously telling you it's worth the most. Make sure you're giving getting an honest appraisal and go into the market with realistic expectations, right?
We missed a listing today where we told the vendor they're going to spend 30 or 40 grand to get the house ready. We're adamant about it and said you have to do it, and he didn't have the money. We said you can sort out later with our tradespeople. And then he actually listed with another agent. We said, we know you guys are the better agents. That to me doesn't make sense, but because we gave them advice, but they haven't followed that advice, and they will sell for a lot less than what they're thinking, or we'll get it back.
So... Alex Phillips's tips and tricks. If you're going to sum them up, expectations need to be managed is one thing. What about buyers? Are you saying right now there's some heat back in the market? You'd say move quick, or
move quick. If you're, so firstly, if you're a buyer listening to this, make sure you're prepared. So when you make an offer, it's an offer that you can act on and it's binding, and the vendor can go, okay, I can make a decision on this.
So what do you mean by that? As in, give the offer in the form of a signed contract and check?
Signed contract, or like an email that you could execute immediately. The good thing is we don't really do take signed contracts because you might do some further negotiations, but with DocuSign and deft payments right now, we've got one, we'll finish today, it'll be sold 20 minutes after we negotiate. But
as in, like a verbal offer of the phone doesn't really mean anything.
No, but if you can confirm to the agent that if an offer is accepted, you can exchange unconditionally immediately. Do that. So what that means is the main thing is you have to be mentally ready to do that, because anyone can throw offers around, but then you can start panicking when you get to say your offer's been accepted. And if you can't act on it, we had that happen last week. And then, luckily enough, we found another buyer, sold to someone else, but they actually weren't ready.
So are you saying that you as the agent and your advice to vendors is that you would be taking written email offers a lot more seriously than these verbal offers, right?
Definitely, yeah. And direct from the buyer, send it to the vendor with any terms they've got on it. Make sure the buyer's email could be a binding offer, because they've got their finances and deposit ready.
And how do they make that a binding offer?
After, to confirm that straight after it's accepted, they sign a contract.
Yeah, so you say, okay, we accept your offer, but we've got 24 hours to exchange.
Yeah, correct.
Yeah, so you'd want them CCing in their solicitor with the offer. You want it looking like they've got advice, they're ready to go.
Correct.
And do you give this advice to buyers on the phone when you speak to them?
Yep. Yeah, but we actually give them advice before they make the offer. Like we're before they even at the open house or when we're doing a follow up, get them fully prepared. Like the one that we're selling today in Tamarama, we've got 2 buyers. One was ready yesterday to go unconditionally. We had another one we knew was going to be ready today. So we told the owner to wait a day. So they had 2, and they're probably about $1 million better at the moment. But there was a lot of things we had to do to get them unconditional. It wasn't just that. It was getting builders through. It was getting not a building inspection, but getting quotes. It was there's a lot of other nuts and bolts we had to fall in place. But now the owner knows that he's got 2 buyers, and whoever's the best he can sell to straight away. But it's also got them a better price.
Yeah, and he can see the legitimate offers in writing, and he knows where he stands. He's not just taking your word for it either.
Yeah, exactly.
And so, just something to go back on the market activity at different price points. I want to talk about both the sales side and then the rental side, because there's also a lot of sort of media myths, you could say, or also media facts talking about tenancies and the rental market. So on the sales side, you already mentioned that $3 to $5 million mark is where the sweet spot is. How's that at the moment? Apartments,
apartments are good, 1 to 2 mil. It's a marketplace that come off the most. They're probably the best.
When you say they're good, as in there's
deep demand.
There's demand there now.
Deep, yeah. And also you got to remember now you got first home buyer grant up to 1.5.
Yeah. The stamp duty waiver.
Stamp duty waiver.
Yeah.
You've got properties that haven't moved in 5 or 6 years on value. You've got the rental market. Is red hot, so it's always counter cyclical generally. So then buyers go, let's go buy. And we're finding that that in itself will probably slow up the rental market. But the rental market is really only strong in that sort of 500 to 1500 bracket. Once you get above that, it's actually come off a little bit.
So the apartments, the affordable housing is, the 2 and 3 bedrooms or the 1 bedders, they're the ones that are hot.
Correct.
But the luxury houses, there's not much around, right, in terms of tenants?
No, because it's, they're probably going, why do I want to spend $3,000 a week and
when I could buy a place?
Tear up $150,000 where I can buy a place for $3 million. That's my stamp duty.
Yeah. So just to go back on that point about the apartment market, though.
So for any tenants out there that are looking, so I get a lot of people calling me, being a partner business, how can you help us? So if I was a tenant looking at the moment, I'd get a relationship with a good agent like us or whoever it is, and ask them to look at their ledger of what's falling due in the next month.
Oh, wow. Yeah, that's good advice.
So it's like an off-market forecast. So they can actually see, okay, we've got this in Randwick, it's a 2-bed, 1-bath, 500. Here are the old photos, get them in, rent it, you're done.
And so
you can't do auctions anymore. So that's the price, you just pay the price and the vendor was happy. So be a bit strategic about being a tenant and go, okay, speak to 2 or 3 agents and say, this is my range. Can you look at your ledger, what's coming up? That's a smart way.
That's there's a couple of things there just to elaborate on. So firstly, by doing that, it's a win-win for both parties because the landlord doesn't have to go back to market. The tenant is not going to an open home on the market and having to bid against or just apply against other tenants. You touched on something that not everyone's probably across, the no auctions at the moment. So that was a change last year.
In December, so you can't have 3. You can't ask $550 a week, and then you have an offer coming at $560, $580, $600, and go to the 600.
Yeah, so you can't Dutch auction your rental property anymore.
Price and that's it.
Yeah, which is a good change because people were looking at properties that they're thinking it's $550 and end up renting for $700, right? Yeah. So that's good. So that's great to know that your property management team does that. That you will look at the ledger and work with tenants, but the only way to do that is if these people are speaking to property management teams and businesses and putting their application forward. What else, tips and tricks out there? Is there anything else? Obviously, getting your finance in place, you would say, is a great thing to have. Getting ready to buy and move quickly.
Make sure you do that even before you go looking.
Yeah, of course. Yeah.
I think a lot of, we've sold houses this year to people that have been out there for a week, but they're already ready to go. So, you might actually you might be very surprised you find the right house, then it's taken away from you because you're not ready. And you might actually think you can get a certain amount, you can get a whole lot more, you might be getting less. So then you can go out, set up the right home alerts. the one thing is as well, what I find, going back to how you search, most buyers have filters on their domain and REA. Whenever I've looked, like now, not when I bought 10 years ago, I just go through, I don't have any filters. So I go through everything in the eastern suburbs. And like, because some people only want parking.
But are you saying some of those filters also aren't accurate?
Yeah, because you might find a house that doesn't have parking, but it's got a DA for parking. So you miss that house. So
or it's a street with good parking.
Yeah, exactly. Like, so, Paddington Street's a good street like that. So you therefore you can open yourself up to probably 20% more stock as well. So
and what about forming a relationship with people like yourself for off-market opportunities? Is there a lot of off-market happening at the moment?
We don't do that. A lot of agents do. There is. Like, we do one in probably 15 houses.
That's still something.
It's still something. Yeah, I think an off-market is probably better suited to using a buyer's agent.
Why
there are some agents, who just specialise in that.
Yeah, there's a lot of agents that do that, right?
It's too time consuming for us, with running auctions and everything. I think it benefits a buyer more.
Yeah, I was about to say, I feel like you're adamant that you don't do that, as in that's a value of yours.
Yeah, exactly.
We've also probably got a lot of real estate agents listening into this podcast, given that you're the number one real estate agent in Australia. They want to hear your insight and tips and tricks. That value of yours as an agent that you're obviously putting onto your vendors, why is that?
It's $10,000. Like, it's between $8 and $10,000 to sell a $1 million, $2 million, $10 million house. The great example is the one house we're selling today in Tamarama. The buyer, the standout buyer is someone we called about it. The other guy has been renting in Bondi. This is like a 10+ purchase, renting in Bondi for 5 years, waiting. I've never met him before. So an off market, there was one buyer, not two.
Yeah. So generally,
Yeah.
I should say, they're not realising the full potential of the value of their property because they're limiting the exposure.
Exactly, yeah. And real estate prices for a property is built on tension at one point in time, and that's like if you
that's the hype that you create.
Yeah, if you do off market here, then in 2 weeks' time you go to market. These people go, then you're waiting for those people. Why not go all at once?
So speaking about breaking a myth, I used to hear that some off-market sales are really high because, it's an agent pushing someone out of their home that doesn't really want to sell, and they're testing what crazy price they could get. But truth is, what you're telling me,
that can happen, but probably that's a 1 in 3. I think more than likely it's...
If they could get a crazy price out of someone, who knows what other crazy price they could have got off someone else.
Exactly, yeah.
Yeah. So, just to I guess, wrap up, is there any other sort of tips and tricks, any other words of wisdom? Like I said, we've got real estate agents and buyers and landlords and potential vendors probably listening into this podcast. So if you had a crystal ball, the year ahead, I
think we're probably through most of the negative downturn, like 75% through. I think there's going to be a bit more to come. I think there's still a lot of buffer in the system for what people have.
Pent up demand.
Yeah, the great thing is, particularly Sydney is, and around Australia is built on, real estate and transactions.
Australians love buying homes.
Yeah, so there's always, if you do everything correctly, price it correctly, there's always a buyer there, and there's always a seller. So I think it's just about making sure you know your craft and you got really good product knowledge. That also stems to both agents and buyers. Product knowledge for a buyer can give you can overpower a lot of agents that may not know the area as well.
Yeah, exactly.
And that's something that we try and make sure that we're across is like having the best product knowledge, so they can't overpower us. But
and what do you mean by product knowledge? You mean being
like recent sales, what next door went for 2 years ago, what the house in front went for, what's currently on the market, what passed in, what they passed in at.
Yeah, but they should actually go look at these properties. Because
exactly. And
it's different looking at photos.
As a buyer, you can use that in your negotiations, saying this went for that, that went for that. here's my offer, last today, I'm out.
Yeah, that's a really good piece of advice. I think that I see it myself in our business that sometimes the buyer has the best insight to what something is worth because that buyer has been looking at a certain price range of certain properties in a certain market, and so they know comparables better than anyone else.
Exactly. And you've got to remember the vendors aren't going laterally across the market; they're going up or down.
Yeah.
So they don't really know. So that's up to the agent and maybe even the buyer to level that out.
That's great advice. Well, Alex, thanks for coming in,
Thanks,
mate.
Theo.
Really appreciate your time today. I know you're a busy man. I think you've got something like, over 20 properties listed on the market right now. So very busy man. Appreciate your time and hopefully tune in for more.
Thanks for having me.